Hi and welcome to the Market Alert for Friday, the 11th of December 2020. So the strong possibility post a Brexit trade deal won't happen, says Bojo. Well, it looks like both Brussels and London are battening down the hatches as the chances of a deal wane. So this should bring some volatility to the market. I think it's Sunday night is the deadline, but don't take my word for that. But I'm sure I read something yesterday about this being the case. Meanwhile, in Europe, ECB boosts QE by 500 billion, euro jumps on lack of dovish surprises. So the criminal has printed another 500 billion, another half a trillion, taking the total to 1.8 trillion since March. Staggering, isn't it? Absolutely staggering. And as she says here, this is just brilliant. They're obviously taking the Michael, shall we put it politely. Watch live ECB Christine Lagarde explain how more of the same policy will work this time. This is, I think it was Einstein that said, wasn't it, the first sign of madness or idiocy is to keep doing the same thing over and over again and expecting a different result. So yeah, this woman, this criminal, doing exactly the same as the rest of the central bankers have been doing. And printing another 500 billion, which is why the DAX moved higher yesterday afternoon. Initial job claims in the US, though, bad news here. They jumped the most since March. So we've got sort of the second wave of jobless claims coming now, especially if Trump loses his court cases and Biden becomes president. They're going to lock down for 7 weeks straight off, masks for 100 days. So again, you're going to see massive spikes like we saw back in April, if that's to be the case. Meanwhile, as we're here, the implied volatility down slightly yesterday as the market rallied. But you can see we're coiling. And when we start to coil like this, eventually it breaks. And it generally breaks to the upside, which means that you're going to see a correction in the underlying market. And again, you can see this here. We've got amber now in the implied volatility. And also news for today, whilst we're looking through headlines and things, we've got a bit today. We've got another central banker. That's with a B. Bailey is speaking at 8:30. We've got the Euro Summit, day 2 of the Euro Summit, which is, I suppose we've got the Euro Summit and the Economic Summit. One's one day ahead of the other by the looks of things. And then over in the US, we've got core PPI out at 1:30. So the market again having to make its direction based upon whatever news it gets. So let's have a look at yesterday. It's just a wind back to the morning part of the session. You can see that the market was moving to the upside before the open, and then you can see the volume picking up there. We didn't get down to the low in the pre-market session, just down to the BRN in the futures. And the market, I'm going to go through this quite fast. I'll just highlight certain things for you. You can see the market stopping there because of the volume. But mainly the market traded sideways. DP, always an important level. They want to try and get the market above this if they can. You can see the buying returning there. And then you can see the selling pressure coming into the market as this bar here is less in range than this bar, but the volume is greater than the volume in the previous bar. So there is pressure to the upside right at the DP level there as well. So prices pull back, then they get into a sideways move. And I'm just, like I said, I'm going to fast forward through this because the market didn't really do a great deal. It just became sideways to lower. Then it had to move back to the DP, which you can see there, hitting more or less the same level. And then trading again at that level with some potential weakness and moving in a sideways range. So I'm just going to move through this, and then you can see at 10 a.m. we've got some news that came out. That was when Lagarde was going to be speaking, I think. So not a lot to report there. So I'm just going to jump forward now to the mid-morning all the way through to the market's reaction to the initial jobless claims, which were as the worst since March, which I think is coming up. No, I haven't got it. I thought I had it, but I haven't got it. It was here, and it was just a reaction to the downside. But notice also mid-morning this type of price activity here, where there's a shakeout, and you can see them buying back the market to bring it back. And again, stuck at the DP mid-morning as well. Then in the afternoon, it was a nice afternoon actually, of market moving to the upside, except yours truly forgot to take the pause button off the recording, and I didn't get any of it until I noticed it at around 20 minutes to 4. But again, not a lot to report, but some things to highlight here. We've got this before the market opens. You can see the amount of testing that was done here. And as soon as the market opened, you can see they tested down to this level. Lovely spike in the volume there. Then we get the market closing back above the averages. And then it was a one-way bet because Lagarde had printed another $500 billion. And this moved the market to the upside in one direction there. And I'll just move forward a bit so you can see where we ended up at 4 p.m. with some potential weakness there. It did pull back a bit after this, but that was the move forward the afternoon, which is probably the most we've seen for a few days, if not a couple of weeks in the afternoon, where we'd moved 100 points. So let's have a look, see where we are overnight. The market's initially opening above the DP, trading below this and the 200 MA. Then getting back above it, and as we move forward you can see there's still some weakness in this market in the early hours, coming back below both the DP and the 200 MA, but then getting a bit of a bounce towards the 200 MA off the BRN here, which is down at the 13,250. So if the market's to move higher, it's got to take out the 200 MA and the DP and the close in order to move higher. But in the daily chart, you can see their prices not breaching the previous day's high. We've got another lower high here as well. Yesterday's bar taking out the previous day's low, so a take out of yesterday's low today. We'll see the market testing in this sort of area here as well. So let's we've got the 78 and 89 there as well, so let's just put in a low across here so that we can pick up the low from a few days ago where the market found support and then moved up for a couple of days. So you're looking at 13,157 on the ETX platform there. Quick look at the Dow. This also sideways. You can see that we're coiling here, same as the implied volatility, because obviously it's related. But when this breaks, it's likely to break to the downside given the lows in the implied volatility. However, there's one caveat, and that is Biden being inaugurated in January. So do we get a big correction before the 20th of January? Which is possible. I've seen this in December before. Or does the market stay like this until he's in and then give him a couple of weeks? We have a move to the upside and then give him a couple of weeks before we get the carnage. I think we'll get a bit of a correction beforehand, because they're still trying to do some sort of stimulus deal for another 500 billion in the US as well. And then, of course, the main thing, which, like I say, I'm sure it's Sunday evening is the D-Day, as it were, for a deal. So if that happens, then of course we're going to see the market in carnage from Monday, which again the implied volatility would be pointing to at this time. Okay, that's it for this one and for this week. So have a great weekend, and if there is anything to report, I will let you know. But otherwise, as ever, thanks for watching, and I will see you in the next one.